Breaking news, folks. Someone broke away from the herd. City strategists are saying buy the dip. That's right. They noted that their bear market checklist, only 6 of 18 potential red flags have flown, I guess, versus 17 and a half in that 2000 to 2003 sell-off and 13 during the global financial crisis. Now, they surmise there's a chance of what they call a healthy 12-month gain of 31%. I think we'd all take that. Joining me now, the CFO of Main Street Asset Management, Aaron Gibbs, along with the COO of Entrepreneur Shares, Eva Ados. And Aaron, you've been nibbling a little bit, but you also listened to your clients. Yep. They were really nervous, so you guys have been relatively cautious, and you've been picking your spots. Is it almost time to get a little bit more aggressive?
Look, I'm certainly hopeful.
Has anyone called you and said, let's get more aggressive?
No one is asking me to be more aggressive right now. There's still a lot of fear out there, and we haven't seen a lot of robust buying. So certainly, I think if you're willing to be riskier, this might be that chance. But really, we've only had like 3 days of calm. So I'm not taking that as a full-on trend just yet. I'm hopeful, but I'm still on the sidelines.
And you also even became a little bit more cautious, right?
We did. We were holding a significant amount of cash before, but now we have redeployed it significantly, opportunistically, and we're getting into the markets in a big way starting this week. We think we're approaching a bottom. If we're not at the bottom, we're close to it.
You're close enough that it's okay if you're early.
Exactly. And the markets will end the year much higher. We're tracking significant changes in the advanced decline volume, and our signals show that we're close to the bottom.
What do you like? I mean, not to digress too much. I always tell people it's a pretty simple thing. When I see the AD line, when I see more advances, more 52-week new highs than lows for a week, to me, that's a huge buy signal. What are you looking at that you're seeing the advanced decline line?
So over the last month, we had 4 instances where the decline volume was significantly higher than the advanced volume. And in the past, when that happened, 6 months later, the stock market was higher, and in some cases, significantly higher. And also, if you look at the NASDAQ, the 20-year average is the average that we have now in our valuation is approaching the 20-year average of the NASDAQ. So that's also a good sign.
I mean, there's got to be a sense at some point, that we're going to be near a bottom. No one's trying to pick the exact bottom. Right. When you get the all clear sign, where do you think you're going to be focused most?
So still for a while on value, just because we are in a prolonged inflationary period. I don't think there's any question about that. And growth stocks, or those higher value stocks, are definitely going to face some more headwinds. And when you look at relative valuations on the technology side, they're still only at about their 10 or 20-year averages. It's not like they're just cheap yet. So I think we can
the pendulum to swing a little bit further, because it never just goes to the average.
Exactly.
Right.
And so I'd like it to be a little more where I would say that they're going to be the outperformers. So I'm still more heavily on the value side, just because it looks like an easier bet for the next 3 months.
So even when I think of you, I think about young entrepreneurial companies, but also technology in general. NVIDIA, they reported last night, you probably couldn't get any sleep. I know you tossed and turned. Then you woke up this morning and the stock was higher. You like, this is one of your favorite, isn't it?
That one of my favorites, and that's exactly right. Minus 10% after hours, up 6% now. I think the market's signaling that enough is enough with the selling. I think we're moving into engaging growth again. We're looking into PEG ratios rather than just PE ratios. And NVIDIA, if you compare it to big value companies such as Target and Walmart has 1/3 of the PEG ratio of Target and Walmart. So on a PEG ratio, it's really attractive.
Price to earnings divided by growth. You still like Constellation Brands?
It's my Memorial Day pick going into the weekend, thinking about alcohol. So no, it's within the consumer staples. We know that sector has held up a lot better than many
Although the last week has been a little shaky, right? I mean, you had some pretty adverse reactions to a couple of those names. And, I was just saying that this morning UBS put a sell rating on Kraft Heinz, which I find to be incredible.
Exactly, and that's why I'm picking basically drinks over food, because we've seen some
and a little bit of weed
and a little bit of weed. Basically, a little bit of fun for coming up.
I know your family's watching, but a little bit of weed. Constellation Brands, they have made a big investment there. It hasn't paid off yet.
Yeah, and look, even without that, they're still looking at 9% growth, which for a consumer staple stock is a really good growth play. So it's just like a nice safe bet to be able to get through.
Before we run out of time, and I'll start with you, Eva, the Fed, are you concerned? How concerned, I should say, are you? Some people are concerned they're not going far enough. Others are concerned that they're going to go too far. Very few people have confidence they'll get it right.
Well, we're looking to see if there will be any extra shocks to the system. So as of now, we don't want them to be too hawkish, but because we are looking at their balance sheet too. And then if they are too hawkish, then we risk the scenario for extreme recession. So we think as of now, of course, they're late to the game, but 50 basis points is good enough for now. And then we go from there.
You know, nobody's ever going to be happy with the Fed, but
No.
they don't have a great track record of soft landing. So I think, you know, the bet is
Bumpy?
probably bumpy,
Yeah.
very bumpy.
Yeah, very bumpy. I like that one. All right, Aaron, Eva, thank you both very much. Really appreciate it.